This fund invests in a range of exposures from the fixed income universe around the world. We have a global viewpoint. We're trying to determine where we are in the economic cycle and then pick bonds, government bonds, credit bonds that we think will benefit from the environment that we're in. It's long only, it's unlevered, and we don't use any equities in the portfolio. The investment process is very much trying to find the best relative value from around the world. We don't look at the size of indices. We're completely index agnostic. What we're trying to do is to determine where we are in the economic cycle and then choose bonds that we think would benefit our investors the most over the next 1 year to 3 year time horizon. The fund is very much correlated to the risks in the marketplace. So it could be interest rate risk, it could be duration risk, it could be market risk. What we try to do is to determine where the risks are and then position the portfolio correctly. You can be risk off by having a greater allocation to government bonds, although sometimes government bonds are the source of risk. But of course, you can also dial down the investment risk that you have in the credit side of your portfolio by being shorter dated or by moving up the ratings curve and holding more investment grade bonds rather than having a big allocation to high yield. The portfolio managers who evaluate a bond from a credit point of view also do all of the ESG work. We think it's important that all of this work is carried out by the same team and that we evaluate ESG risks in the same way as we evaluate credit risks for a bond that we're looking at. We think ESG, or the drive to be sustainable or to be a better corporate citizen, is an important part of the credit process. And as bonds become eligible for inclusion in ESG funds, of course, that can have a big impact on performance. So that is something that we want to incorporate into our overall thinking within the portfolio. The Dynamic Bond Fund should be a core holding within the client's portfolio. The portfolio managers manage the risks through the economic cycle and have the flexibility to invest in the correct parts of the fixed income universe. Our job is to try and generate attractive and repeatable and stable income for our clients. Having the ability to position the fund right throughout the economic cycle means this can be a core holding within a client's portfolio.